I'm speaking with Brian Dolan. He's Chief Currency Strategist at Forex.com. And Brian, you've had a lot to look at this year in the currency arena.
Yes, we have. It's been extremely eventful, and I think it's safe to say that the currencies, and the dollar in particular, have been driving many other asset markets. So if you look at the recent movements in everything from stocks to the commodities, most of it has taken its cue off of what's been happening to the U.S. dollar.
Well, let's talk about the dollar, because we are seeing a lot of stimulus by the Fed into the economy, and that's usually inflationary, forcing the dollar down. What is going on?
That was the expectation, and certainly the market did price that in. The dollar from basically June onwards started to move lower in anticipation of the Fed's quantitative easing. The interesting thing, though, is since they've done that, since they actually announced the plan and announced the scale of the plan, the dollar has actually rebounded. So the market's worst fears were not met. And it was very much of a sell the rumor, buy the fact sort of thing for the dollar. The other thing is that in terms of the effectiveness of the quantitative easing and it being inflationary, I don't think that's a real issue either. The output gap is simply too great for inflation to really rear up at all anytime in the foreseeable years. So I think what the Fed is doing is hopefully it is going to have a positive impact on the economy. And we have seen some improvement. So it also comes just as the Fed was announcing that quantitative easing. So that also is helping to contribute to the dollar recovering. So all of a sudden the U.S. outlook is starting to look a bit better. The fears of a double dip are unlikely to materialize, and the U.S. economy is likely to outperform certainly the Eurozone in the next year.
I was going to ask you that because a lot of people look at a currency as a proxy for a country's economic state.
Exactly.
And the dollar seems to be saying that we're doing really well here in the U.S., but other numbers are saying, the jobless number, the housing number, that we aren't there. So what's the disconnect?
The disconnect is that, one, the dollar is not necessarily strong. It's not weak right now. It's actually back in sort of its comfort zone of the last 5 years or so. In terms of the U.S. outlook, the unemployment situation is very difficult, and it's not going to show any signs of improvement in the months ahead. But I would caution people about looking at the unemployment rate as the key indicator. You had the unemployment rate as actually held steady, not because of any major improvement in the economy, but because a lot of people have dropped out of the labor force. As the U.S. economy is starting to improve, those people are going to come back in, and the normal drop that we would expect in the unemployment rate is not going to materialize because of the new entrance to the labor force. So the unemployment rate is likely to stay up there, even though the U.S. Growth is starting to occur. Jobs are going to be created in greater numbers. And the important thing is that the U.S. is still mindful of initiating a stimulus, trying to provide support. That's what the Fed is trying to do. In other major economies, the Eurozone, Scandinavia, and others, the UK, they're undertaking these austerity measures, and these are going to be major negatives for growth in those regions. So I think that's where the U.S. is going to stand out over the next year.
Brian, I appreciate your time.
Thank you, Karen.